What are standard and itemized deductions on Jackson Hewitt? Hi everyone, this is Alana from Create, Login and Delete. Let's jump right into the video. One of the first steps when filing your annual tax return is to decide whether to take the standard deduction or to itemize your deduction. The common goal for every taxpayer is to take the option that gives the lowest overall tax. An itemized deduction is an expense you can subtract from your adjusted gross income, which means you could pay less in taxes. You should itemize deductions if your allowable itemized deductions are greater than your standard deductions, or if you must itemize deductions because you cannot use the standard deduction. According to the IRS, itemized deduction that taxpayer may claim include the following: unreimbursed medical or dental expenses that exceed 7.5% of adjusted gross income, state and local income or sales taxes, real estate and personal property taxes, home mortgage interest, gift to qualified charity or non-profit, personal casualty and theft losses from a federally declared disaster. A standard deduction is a specific dollar amount that reduces the amount of income on which you are taxed. The standard deduction amount depends on your filing status and whether you are 65 or older, are blind, and whether other taxpayer can claim you as dependent. If you are 65 or older on the last day of the year and don't itemize deductions, then you are entitled to a higher standard deductions. If you want to know which deduction is best for you, you want to contact the tax professionals of Jackson Hewitt. And that's it for this video. If you have any questions or confusions, do leave them on the comment section below. And don't forget to hit the like button and subscribe to our channel.